The S&P 500 closes lower for the third straight day. The Dow gives up over 200 points as fears over the economy return after weak non-farm payrolls data for August. The street will also watch for jobs data for the month of August due later this evening. Stocks in the Asia-Pacific trade mixed following weak cues from Wall Street. The GIFT Nifty is also suggesting a lower start for the Indian markets. Crude prices tick higher as the OPEC delays production hikes scheduled for October by 2 months, while US inventories also report a decline. Union Minister Hardeep Puri welcomes the recent decline in crude oil prices, says the cost of oil is higher due to artificial scarcity, also says that the government is not looking at higher taxes on fossil fuels at the moment. And the GST Council may deliberate on levying 18% GST on gateway fees earned by payment aggregators on card transactions up to 2,000 rupees. That's a CNBC TV 18 exclusive. Good morning. You're watching Power Breakfast this Friday morning on CNBC TV 18 in the Mumbai News Center. I'm Hormas Patakia. Let's first take a look at how the Asian markets are faring, and it's a quiet start to the final trading session of the week across the Asia Pacific. The Taiwanese index, though, is the outperformer, trading with gains of around 0.8%, but the Hang Seng absolutely at the flat line. Even the Japanese indices are continuing absolutely flat at the moment. The Shanghai Composite is trading with gains of around 0.2%. The underperformance, though, is coming from South Korea, where the Kospi, the benchmark index there, is down over 1% this morning. Some macro data also coming in from China with regards to the household spending that came in below the estimates that were projected. So that is set to be some bit of weak macros coming in there from Japan. But the GIFT Nifty also pulled that up, and that will give you a fair idea of how the Indian markets are likely to start off, with the Nifty implied open there suggesting a 60-point downtick as we speak. It's been a bit of a choppy trade over the last 2 sessions for our own markets, so we'll keep an eye out on that. But the focus this week has been on commodity prices, and especially oil, the fall that we have reported over this week, and then this bit of a rebound that we saw. And for that, now Manisha Gupta is joining in with all the updates from that commodity space. Manisha, good morning. Some bit of relief coming in for oil prices with the latest OPEC move, I guess.
Oh, well, absolutely. And it's a big one, really, in that sense, because the markets were anticipating that OPEC would react to this with the kind of price decline that we've seen. Already down 6.5% for the month of September. OPEC and allies have reacted to that and delayed their planned production hike by 2 months. So we wouldn't see anything happen in September and rather October and November, and the production cuts would now happen in from December, because that is the time that we would see the winter demand also come back into the market. That is what OPEC really seems to be thinking at this point in time. Apart from that, a very big decline in U.S. inventories to the tune of almost 6.9 million barrels has been supportive as well. So this is what we are looking at in sense of supplies. But remember, the demand in U.S. also has been weaker. So much of the OPEC news clearly seems to have been shrugged off by the demand concern. China and U.S. numbers are still on the weaker side. We are looking at U.S. Natural gas and gasoline prices continue to trade at a multi-year lows. Also, there is an increase in supply coming in from Libya as well. So markets haven't seen a lot of long positions being created. We did see a knee-jerk reaction in sense of crude oil prices gaining up by 1%, but the overall settlement came in only by 0.3% on the higher side. In the Asian markets as well, we are still flat, still trading around those 9-month lows, so not too much of a reaction. What perhaps has been saved is that you haven't seen further declines come in for the crude oil prices. But all eyes on the U.S. non-farm payroll data, and that would tell you on how the next week is going to be in sense of commodities.
That's going to be the big macro data, isn't it, for the evening? Manisha, thanks a lot for that update. Now, Union Minister Hardeep Singh Puri has welcomed the recent decline in crude oil prices. Speaking to Shreen Bhan at the Indian Energy Transition Summit, Puri also said that the cost of oil is higher due to artificial scarcity. Puri added that the government is not looking at higher taxes on fossil fuels at the moment. Take a listen.
Ultimately, demand and supply.
Yes.
And I was very encouraged by your reference just now to OPEC having decided not to undertake production cuts. Hey, wait a minute. We had a production daily of 102 million barrels per day.
Yes.
They reduced their production by 5 million. I've seen statements by OPEC Plus to the effect that they will unwind those production cuts. Now, I'm on your side. If after the drop in oil prices, will they still And I'm not tempting anybody, but I'd like to see, because they've told me at a bilateral level that they will, unwind. There are two things that I'm interested in. There is more oil in the market available. There's no shortage of availability. The price levels are maintained essentially on account of artificial holding back.
Right.
If the total amount of oil which is available in the world is allowed to be available, then I think we'd be in a slightly more comfortable situation. We have so far, Shireen, navigated the terrain reasonably well. Anyone who is in the transportation-related business, whether you make roads, highways, or you do that, you want to move into cleaner fuels.
Yeah.
So you want to use diesel for agriculture purposes, you want to use diesel, and you want the vehicles to be more that way. So I think the comment which got attention was that we will tax it out of, or some, I don't know. But but this is all, but it took just few hours, and then it was very clear. I personally, by the way, he's not the only one. A lot of people in individual capacity have talked about it. But that's not government policy.
Hardeep Singh Puri there in conversation with Shireen Bhan. Now on to the US markets then. Wall Street ended largely lower with the S&P 500 declining for the third straight day. The Dow Jones also closing 200 points lower. Some brief recovery from the lows of the day because at one point the Dow was down almost 400 points. The Nasdaq outperformed and with minor gains. Now in the latest sign that the labor market is weakening, the August private payrolls data grew by 99,000, which is the smallest gain since 2021. And it was sharply below the Dow Jones consensus estimate of 1.4 lakh. Now private sector payrolls grew at the weakest pace in more than 3.5 years in August, providing yet another sign of a deteriorating labor market. Steve Leisman gets us all the details on the August private payrolls.
Private payrolls for the month of August rose by just 99,000. That's against an estimate of 140,000. It's the lowest level reported by ADP since 2021. Goods sector up 27,000. Not really that bad for the goods sector, but service sector not doing its part, just up 72,000. All of this is against a payroll estimate for Friday of 161,000. We'll see how confident economists and forecasters are in that forecast as the day goes by. July was revised down by 11,000 to 111,000 from 122,000. Where were the jobs and where weren't they? Well, small business did not do very well in this month, down by 9,000. You can see right there. Medium okay at 68,000. Large businesses greater than 500 employees up by 42,000. By industry, there's education and health services at the top again, but not as strong as it's been. Construction, okay, 27, but in that goods sector, it was manufacturing that took off the 8,000. Financial activities, okay, but professional and business services down by 16,000. Looking at this data on wage gains, unchanged at 4.8% year over year for job stayers, 7.3% for job changers. We don't know, because we don't have the series going back pre-pandemic, where the right level is. But it looks like we have, at least for a couple months here, bottomed out at this, what do you call it, relatively high, but much lower than it had been in terms of the wage gains that were out there. I don't know, some concern out there about the economy from yesterday's Beige Book. They said consumer spending ticked down in most districts. Only 3 districts reported, of the 12 districts of the Federal Reserve, reported any increase in business activity. So there seems to be a gathering weakness here. How much deterioration? Well, we'll see at 8:30 with jobless claims, and again tomorrow in the BLS payroll report.
Steve Leisman there with the updates. Let's listen to ADP Chief Economist Nella Richardson discussing the August ADP employment report.
Well, it tells me that after 2 years of outsized hiring and growth, we're finally seeing a normalization that's a little cooler than expected, cooler than average, slower hiring than we've seen in the past. And so taken together with other data, it's pointing to a softer labor market. We're not falling off a cliff. These are not job losses, but slower hiring, stable wage growth. Yeah, structurally, the economy's changed a lot over the last 4 years, and I think one of those notable changes have been the pickup in small business. Remember, new firm formation, business applications soared during the pandemic, and some of those were really viable small firms.
Now, JP Morgan's Michael Ferroli believes that the Federal Reserve should cut interest rates by 0.5 percentage point this month. Listen to what he had to say.
We think there's a good case that they should get back to neutral
as soon as possible, a neutral policy setting, which, you know, is probably at the highest something like 4%, which is 150 basis points below where they are now. So we think there's a good case for hurrying up in their pace of rate cuts. If they wait till it's collapsing, I think that's waiting too long. So we think there's a good case, as I said here, to get ahead of this, you know, any further weakness. So moving soon seems to us like the right thing to do here.
Time for a short break now on Power Breakfast. Up next, the Power Prep segment sets you up for today's trading session. Stay tuned. Back on the other side. Well, how will all these global updates that you saw in the previous segment impact our own markets? We now have our research team joining in with the Power Prep segment to tell you all about today's trading session. Well, it's been a pretty choppy moves for the Nifty over the last couple of trading sessions. The index made a new high, of course, above 25,330, but then that's where the index has taken a bit of a pause. And even in yesterday's trading session, which was the weekly expiry, we opened gap up. We could not sustain above those levels. We tried testing 25,200, but we could not sustain above that either, and eventually closed below 25,150. So now 25,300 becomes that barrier for the index that it needs to cross. And even for the week now, the Nifty, even the contributors yesterday, it was Reliance that led the downside for the Nifty. It was some bit of selling pressure coming in there after the bonus issue was approved. That was offset by heavyweights like ITC, HDFC Bank, Infosys, and some buying coming in for Titan as well. And that four stocks offset the losses that came in from Reliance Industries. Now for the week, the Nifty is flat, well, kind of flat with a negative bias, of course. It'll be the first weekly drop in 4 weeks if we do manage to end lower today as well. The Nifty Bank, though, has emerged as the outperformer. We've been speaking through this week that this might be the week for the Nifty Bank. It's still not above those 51,500 levels, but still trading with the positive bias for the week. The outperformer, though, came from the broader markets, and it was the small cap index that led the charge yesterday in an otherwise wobbly market, if you could call it that. The small cap index was up almost 1%. There were some very important cues that we need to track today, some questions that we need to ask. Do we see another range-bound session today because all eyes are on the all-important jobs data? Will HDFC Bank and ITC continue to support the Nifty today? And of course, will the broader market outperformance continue in today's session as well? Of course, all eyes on the non-farm payrolls, the QIPs, block deals, they continue. Some listings today as well, and the Godfrey Phillips AGM, where everybody will have their eyes on. The GIFT Nifty so far is suggesting a slightly negative start for our own markets. Now over to Vamakshi, who would list out the stocks you need to watch out for today. Vamakshi, belated birthday wishes. What's on your list today?
Well, thank you so much for that, Hormaz. Good morning. Let me first start off with Finolex Cables. Nikhil Nayak has stepped down as the chairman, and they've appointed Ratnakar Barve in his place. Godfrey Phillips will also be in focus on the back of its promoter dispute as well as the AGM that is scheduled today. The Delhi High Court has refused to restrain Beena Modi from voting on behalf of K Modi's 48% shares for her own reappointment. In fact, Delhi HC says that there is no merit in Ruchir Modi's plea seeking to restrain her from voting in the AGM scheduled today. Sundaram Clayton is the next one that I'm watching out for. The company has commissioned commercial production of aluminium die castings effective today at State Industries Promotion Corporation of Tamil Nadu. Ashoka Buildcon is the next one I'm watching out for. Its arm Viva Highways has monetized the Pune land parcel for around 450 crores. Pidilite has entered into an exclusive distribution agreement with Caltech Group, and the company will serve as an exclusive distributor of the company's products in India. NLC India and GMDC also on our radar. The Coal Ministry has issued allocation orders for 3 commercial coal mines, which includes an allocation for the Machakata coal mine to NLC India and the Kudanali Lubri coal mine to GMDC. KC International in focus on the back of a couple of order wins. They've received orders worth 1,423 crores for design, supply and installation of transmission lines in Saudi Arabia. Camlin Fine Sciences is expected to consider fundraising via rights issue on September 10th. And lastly, watch out for Nucleus Software, and that is because the company will be buying back nearly 1.67% of its equity for 1,615 per share. The overall buyback size is 72.4 crores. The buyback opens on September 9th and closes on September 13th.
Well, actually, thanks a lot for that update. Now joining in is Nigel with cues from the F&O space. Nigel, good to have you back on the show. What's the setup on the F&O side looking like?
Well, yesterday it seems the markets were preempting something, or a weak overnight handover, because towards the end of the trading session, maybe it's an expiry-related factor, or maybe maybe in fact, they were sensing that maybe you get a weaker handover, but we ended virtually at the low point of the day. So that's about yesterday's trade. But I don't think there's any big reason to worry. The dollar index is softer, which is good news from an India market perspective. Brent crude prices as well closer around the lower end of the range, and both these two work in India's favor. In terms of yesterday's trading action from the F&O market, well, you saw the Nifty futures premium actually moved up a little bit, and there was unwinding of positions both on the Nifty as well as the Nifty Bank, so no need to worry on that front. What do the FIs do? Well, they're still net long, but they have unwound some of those long positions, so it's come down from the start of this week from around 2.5 lakh contracts, closer to around 2 lakh contracts. And in percentage terms, the long positioning is at around 68%. Moving to the client positioning, well, we have been saying that they are short, but they as well have been covering their shorts, which I view as a positive because the clients are the ones that normally get it right, and they have been covering the shorts as the market has seen a couple of down days. So it's cut by close to 50,000 contracts. Options data comes up for you on the screen, 25,200 call, 25,000 put. Both of them were fairly active in yesterday's trading session. And going by the premium and plugging in the numbers out there, on the downside, 24,950 becomes extremely crucial on the downside. So we'll have to keep an eye out on that mark because there was writing being seen at the 25,000 put. While on the upside, the recent high has been around that 25,350 odd. So that becomes a bit of a resistance zone. The Nifty Bank, that's the mover. First reference point comes in at around 51,200, 51,250. My guess is that given the GIFT Nifty suggesting 100-point downtake, maybe risk reward could favor the bulls if you buy the low point of the day. Back to you.
Nigel, thanks a lot for that. Time for a short break here on Power Breakfast. Up next, we get to the highlights from what's likely to be in the agenda in the next GST Council meet. Stay tuned. Back on the other side. Welcome back. Now, the GST Council will deliberate on a slew of important issues when it meets on the 9th of September. The issues of GST levy on gateway fees that the payment aggregators earn on small transactions may also be on the agenda. Timsy Jaipuria gets us more.
A slew of items on the agenda for GST Council when it meets on 9th of September. Let's take you through some of the key ones. The Council could clarify on whether 18% GST should be levied for card transactions below 2,000 rupees on payment aggregators such as Pine Labs, Razorpay, etc. The Council nominated fitment committees of a view that these aggregators are intermediaries and not banks or financial institutions. Thus, they are not liable for a GST exemption. Currently, these aggregators were exempt from GST on transactions below 2,000 rupees. If approved, this could mean 18% GST on these aggregators. The Council is also likely to deliberate on matter as to whether to allow sharing of GST data of taxpayers with other government departments, ministries, etc. The Council had deferred taking a decision on this in the past, seeking that this could mean a hit for the taxpayers, especially meaning a business confidential data sharing that is not acceptable by the Council then. And sources say that now the Council could approve this with riders of safety and security. Sources also say that the Council could clarify on participating interest in oil and gas exploration contracts. Here, Fitment Committee has suggested that any subcontracting or passing on exploration contract to a new entity is liable under GST. If approved, it could mean 18% GST with ITC. And last but not the least, Council is likely to have a heated discussion on cutting GST on life and health insurance. Council could discuss Fitment Committee's proposal to allow GST exemption for only pure term life insurance policies and reinsurances, which could mean a revenue implication of 200 crore rupees plus. For health insurance, Fitment Committee could not build a consensus, and thus it has suggested 4 options, including a complete exemption, exemption for senior citizens and for policies up to 5 lakh rupees, or exemption to only those premiums which are paid by senior citizens, or reducing GST on all health insurance premiums to 5% with ITC. The Fitment Committee has flagged these options with their potential revenue implications. It is now to be seen what all GST Council approves on 9th of September.
Timsy, thanks a lot for that. So now, how will a potential GST levy on gateway fees when it comes to small card transactions impact payment aggregators? Ritu Singh is here to decode that. Ritu, take it away.
Well, following the demonetization of 500 and 1,000 rupee notes back in 2016, the government had then decided to waive off the service tax on credit and debit card transactions of up to 2,000 rupees in order to encourage digital payments. And this is even before the GST came into being the next year in 2017. However, now my colleague Timsy Jaipuriya is reporting that the GST Council in its next meeting may consider imposing an 18% GST on the payment gateway fees, which is imposed by payment aggregators for facilitating online transactions between merchants and their customers. Now, this fee typically ranges between 0.5 to 2%, but you can assume that on average, this fee is roughly around 1% for the industry. Now, what is the impact if a GST of 18% is imposed on it? Well, the payment aggregators that we spoke to said that if there is a tax that is to be paid, it is very likely that that will be passed on to merchants. Now, whether merchants absorb that cost or pass it on to customers, we'll have to see. But keep in mind that the bulk of these sub 2,000 rupee transactions are also now done via UPI, which has emerged as the most preferred route of retail digital payments, where the fees still remain zero because UPI has zero MDR. So there is no impact on payments done through UPI. This is only going to impact credit and debit card digital transactions. So as far as the customers are concerned, the impact may be limited, but for the payment aggregators, it is likely that they will pass on this burden to the merchants.
Ritu, thanks a lot for that. And finally, it's that time of the year when many get together to welcome Ganpati. It is a celebratory mood with the festival of Ganesh Chaturthi closing in. And ahead of the 10-day festivities, the first look of the famous Lal Bagh Raja was unveiled in Mumbai. The Lal Bagh Raja is also one of the city's oldest and most popular Ganesh mandals in Mumbai, drawing thousands of devotees who come to get a glimpse of Lord Ganesh. We leave you with these visuals on Power Breakfast. And I guess I don't need to tell you, Mumbai ka King Kong, Bazaar Morning Call takes the action forward.